there, welcome to another Crypto Dave video. Now today I've got something a little bit different for you. I've got an interview with the CEO and co-founder of swarm.fund, that's Philipp Pieper, and we recorded an interview this morning because yesterday they announced the launch of their Masternodes. So if you go to their website, I'll put all these links below, but there's a news article at the top of the website. You can read all about their Masternode system, which is due to go live in September. So I got the opportunity this morning of sitting down for about an hour and speaking to kind of Philip about their Masternode system, about governance, fractional Masternode ownership, which is something else they're launching at the same time. So anyway, enjoy the interview and let me know if you have any questions in the comments below.
And what was great about it, actually, we had, the global community of crypto back then, which was 2015-16, just come in and stop in and, spend time there. So all I had to do was just listen into the crazy ideas, sift what was half good, half bad, half ugly, and just, put a little money here and there. And as you experienced, that obviously over time became more interesting.
Yeah, absolutely.
And so I started to trade a little bit of digital assets, and it became obvious that sort of the volatility was really was really hard to escape. So I saw the benefits of crypto, but at the same time I said, this is all we're trading air, and this air is not different flavors of air; it's all the same air. So we need something of a breeze of fresh air that comes into the space. So actually, the idea of security tokens resurfaced again, because it was actually an idea that was also worked on beforehand, but done with the wrong technology, with the wrong go-to-market. And so that's how sort of the idea of Swarm got reignited. And then sort of we went out and started working on these tough nuts and how to crack it. And here we are.
Fantastic. I think it's probably good if we take a quick jump back, because I'm sure there's a lot of people kind of watching this that don't know what Swarm Fund is exactly. So I don't know if you have like a sort of like a very quick kind of like elevator pitch type, kind of a couple of minute overview of Swarm Fund, exactly what problem it's addressing and stuff like that. And then we can pop that back in at the beginning and before we talk about the other stuff.
Sure, happy. So what we are is we are the first, full stack security token platform in the market. And that involves both a legal construct, a consensus, and a sort of a governance technology, as well as the a security token technology, which actually involves a huge amount of regulatory compliance and certain restrictions that have to come into play. We decided to go to market with this technology by tokenizing LP positions and funds. So what we do is we go to existing funds with track record. We look and smell and feel like a institutional investor. And then on the other side, we tokenize those LP positions and we offer them to both crypto investors as well as family offices and retail investors. So the problem that this is solving for both parties is the following. Those positions have been traditionally very restrictive on what the kind of capital was allowed to invest into them, which means you had to have a minimum amount of capital that you put in. You didn't know whether you can get it out for 7 to 10 years. There was no way to do a fractional ownership transfer of that. So it's actually solving for all those three investor groups. It's solving something very key, and it has both to do with access. So how can I access these kind of investment opportunities in a much easier fashion, maybe leaner fashion and more direct? And then it has to do with liquidity. How can I sort of de-risk when I need to de-risk? How can I increase my position if I have a more bullish view on it? And so we are not an exchange, but at the same time, we are in technology that can help people, hold true to the regulatory compliance in the token world, while actually sort of bringing that liquidity into existing capital pools.
Yeah. So when did you actually start working on Swarm? Because I know you had an ICO end of 2017, was it? Q4?
That's right. So we did an ICO in September to end of October of 2017. But we started working on the concepts around it actually end of 2016. So it must have been around October, November that we first, very seriously went about it. We took some of the learnings that was done in the first iteration of Swarm, and then sort of improved on it, and actually sort of in many different directions. And it took quite some time to, I'm a big believer in design thinking being sort of, you have to be, developing the empathy of who you're trying to solve something for, understand the problem really hands-on. So we went out and talked to, fund managers, we talked to other constituents, and we understood a little more what their problem set looked like. And that's how we developed like a go-to-market strategy, even before thinking about, what product and how decentralization comes into play and so forth, which also guided us to release product way earlier than others do. So, merely, I think 1.5, 2 months after the ICO, we released the first version of the product with real customers on it. And that obviously has done really well for us because we're really hands-on exposing product and solutions to people that tell us what they rather want and how that should be modified. So it's really a good way to explore a market without overthinking and hypothesizing too much.
Absolutely. I mean, it seems quite interesting because obviously you've done quite a lot of work before you went to ICO. So you were there with a product, pretty much soon after, back in January this year. I mean, it seems that, I think the ICO kind of space had a lot of negative press, I think, probably in the last 6 months or so, because there are so many people that have just, gone out and gone, oh, here's an idea, give me X amount of kind of millions of things, and then we'll think of how we're going to do it, or even, whether it can actually kind of be done. So it's nice. I suppose it's quite refreshing to have a kind of product that was kind of fleshed out to a certain extent before you actually then went to market to get those.
Well, and even more so. I mean, that's one thing. I think we did things very different than what other people did during the time. The other thing that we did very differently was we were very clear from the beginning that we couldn't pitch to have a regulatory compliance business model or product, and then throw everything of that principle out of the window when it comes to an ICO. Right? That would have been kind of insane and inconsistent. So we actually did a couple things very diligently. We made sure that it actually sort of was that we had a version of the product already at the ICO that would actually so that was the core of that was actually the governance platform that we actually, the day after the ICO ended, we put that to the test, where actually the first decisions were made on how the token should react. And those decisions influenced token behavior. In this case, it was the liquidity release of the token. So we actually made sure that not all tokens were tradable or transferable right out of the gate. Secondly, there was a immediate participation of the token holders. Thirdly, we actually put accreditation checks in place during the ICO, which obviously were a huge hurdle to overcome in comparison to other ICOs.
Fantastic. So you have two tokens within the system. So you have SWM, which is your main utility token, and that's used for the purposes of kind of gas transactions on the network, as well as purchasing into individual SRC20 tokens. And the SRC20 tokens, you have an individual token for each investment opportunity, I suppose, on the platform. So every opportunity has its own specific kind of token, can be different numbers, I presume, different prices, everything like that.
Correct.
And your SRC20 tokens are running on Stellar's network, is that correct? Well, you've got your own blockchain, but it's using their technology.
Well, it's using the Stellar stack, and we built a whole sequence of additional technologies on top of it. So what we found with Stellar is a hugely beneficial stack that had, actually, we didn't give them as much credit as we actually discovered in the aftermath, how much they actually had done and how versatile it was for us to leverage it. It could have been also other technologies, but actually we found a very good base there, and we found a good community that actually can help develop things there very quickly. But at the same time, we had to build a tremendous amount of innovation on top of it. So we built governance layers, we built certain wallet structures, we built sort of the transfer restrictions that need to be in place for these security tokens to be compliant. We are in the process of building fiat on and off ramps. Ideally, obviously, this all leads to interoperability. So how does our blockchain interact with other blockchains, both in terms of the funding coming in as well as the SRC20s being possibly sort of transported onto other blockchains. So it's a highly versatile infrastructure that we built. And the reason why we built it on a dedicated blockchain, I think it's worthwhile mentioning, is that in the interaction with institutional investors, they seem to have issues when it comes to permissionless infrastructure, especially when it comes to financial transaction. And financial regulation often requires financial transaction to reside within the territory of regulation. So when we built it on dedicated infrastructure, it was way easier to have initial conversations with institutions and tell them and demonstrate to them that if push comes to shove, that we can actually hold true to that regulation.
Fantastic. And I suppose that leads quite nicely onto the Masternode side of things. So I saw it was up on the website, and there's a specific website now for your Masternode, so swarmmasternodes.com. I'll put all the links in the description below, obviously. But talk me through that. So it was announced yesterday.
It was announced yesterday. So
so why the push into Masternodes specifically?
So when we built this stack, we knew that in order to be faster, iterating faster, we would have to sort of have a more centralized network in order to have a quick iteration on it. If you're too decentralized too early on, it's hard to do the updates in the speed that you need in order to iterate on these kind of things. Secondly, it was also not clear from the beginning so what the decentralized nodes would do and how they would carry data and privacy in a privacy safe way.
Yep.
So in a way you have to, or that was our conviction, and it treated us well. You have to trial to see what is the data, how does it manifest itself, what do the outside constituents need in terms of making decisions, how is the whole permission on accessing underlying data then being sort of architected. So over time, we needed actually time to really scope out what these masternodes would be doing and in what phases we would roll out that functionality onto the masternodes. So we were actually already using masternode architecture ourselves in our dedicated infrastructure. And we felt now the time was come that, number one, it proved out to be working. And number two, that we actually now have a good understanding of how to architect these masternodes to be compliant for going forward use cases. So we announced yesterday that basically now people, in a similar fashion like in other blockchains, they can stake a certain amount of Swarm, in this case 50,000 Swarm. They can download Masternode software. This is probably going to be beginning of September. We're ambitious to say that probably it's going to be September 1st. We'll have to confirm that though. And then anyone can run a Masternode and be rewarded for operating that infrastructure. And that reward comes in two ways. One is block rewards. So in a round robin concept, basically the blocks that are created that get rewarded amongst the eligible nodes in the network. And that is a usual concept that is sort of known from other blockchains as well. But then we added a second thing that's still some of the details we still have to manifest legally and from a regulatory perspective, but we're very optimistic that we'll get that done in a reasonable time frame this year. We introduced something called the the Market Development Fund, which means that the same amount of proceeds that go into the block reward are set aside on top to be invested by the masternodes into these investment opportunities residing on the Swarm network. And the Swarm masternodes can take those decisions, and they're being rewarded with a 30% of the proceeds coming out of those profits. And then the 70% is being sort of stacked on top of the investment going forward. So it becomes a really interesting, with compound interest coming into play, it becomes a really interesting component that, as much as at the beginning it doesn't play that big of a role, actually down the road it becomes a much stronger incentive for the masternodes to operate. So in contrast to other masternode concepts, we don't have a degradation of, so a aggregate degradation of incentives, but over time these incentives might even grow higher than they were initially.
Yeah, I thought this was really interesting. So obviously you've got the block rewards side of things, which is, I suppose, in some ways similar across a lot of different kind of masternodes, and that's deteriorate or reducing over time, as in a lot. But what you're hoping was that this second side of things will take up that slack. So overall you'll have, maybe a kind of like a similar amount of rewards, or maybe even an increase in rewards going forward, but without having the issues of, inflation within, huge block rewards and stuff like that.
Right.
And when is that going to be voted on? Because I noticed on the website that still there's some bits to talk around I know you said there was.
Well, so generally said, and that's what I mentioned actually initially. Also, we from the get-go we were a token governed organization, so we are a nonprofit organization, and the governance of what we do and how we prioritize things and the policies that the network actually operate are being governed by the Swarm token holders. So these are proposals that we've been developing, but they are not ratified until we actually put this to a community vote. So the proposal is going to be voted upon in the next couple of weeks. We hope to get it done within August. And so that will be transparently then, once the decision is made, it will be transparently put into these separate wallets and then be governed by the network to be drawn from. And then sort of the community can see how it works. And if it works well, then it continues to roll. If the community a year from now says the rewards have to change or the mechanics have to change, they can still vote on that too with a certain majority. What we're doing with Masternodes is we're taking a subset of highly vested Swarm token holders. So, I mean, owning 50,000 tokens is not for everyone. But these vested token holders then can vote on the deployment of these 10 million tokens that we set aside for them to manage.
Right.
So it's basically a subset of decisions that actually get done by Masternodes. But at the same time, we're opening up something called the Swarm Masternode Fund, which we've done also with the Dash Masternode Fund, which, not everyone has 50,000 tokens, yep. Which means that you can still go to the platform, you can qualify as an investor, and you can put your Swarm tokens in whatever shape and form towards that fund, and you'll get a prorated fashion of the 50,000 that is going to be running as one node from that fund.
Yep, and this is the Swarm Masternode token. So this is fractional ownership, really, of a Masternode. So if you don't have the capital, you don't want to do it, or you don't have the technical skills to be able to kind of run a Masternode, you can still get involved. So you're buying a fractional amount, so you're buying 5%, 10% of
correct
the Masternode, and then taking that percentage of rewards as well.
Yeah, and it's not just about the rewards, it's also about the governance. So you can still take a fractional percentage of the governance of that one node that you're participating in to then help make decisions on investment opportunities. So it becomes very inclusive. We're not trying to draw a line with the 50,000 of the profile of investor that we hope to actually sort of be excited about running this infrastructure, but it's more so that anyone can participate. We just have to find the right entry point for those to want to participate. And that was also the reason why Dash looked very favorably into the Dash Masternode Fund, because finally it was a way. I mean, today a Dash Masternode is staking 1,000 Dash. I don't know what the latest number is, but it's around $200,000.
Yeah, I mean, absolutely. And it was over 1 million, only 6 months ago or something like that. But it's a really good concept, because I remember sort of I had a Masternode share. So I had a Masternode share in Dash. But then suddenly the price of Dash went to over $1,000, and you realize that you've got, $50,000, that you've just sent to some random, username over the internet, and you're hoping he will do the right thing and, and do it. And I never had any, issues with my kind of shared Masternode when I did have one, but it takes a huge amount of kind of trust to kind of do that. And, it might not be somebody deliberately doing something wrong, but they could get hacked. They might not have all the kind of technologies in place to be able to secure those things. So I think, yeah, this is a really nice way of doing it. And tokenizing that kind of Masternode, and then obviously you can then just roll up new Masternodes if you get more investors, people want to kind of buy into it.
Right.
And
by the way, you're touching on something that is actually generally a use case that people have issues with. Like any kind of syndicate, even if it's an ICO syndicate or any kind of other syndicate management, becomes really difficult because you don't have the trustless infrastructure. You have to trust someone to own the wallet and do the right thing with it, or report back in the right fashion, or give you access to the proceeds in a transparent way, right?
Absolutely.
So the components that we're building in this part of the platform, they will be opened up more. We haven't done that quite yet, because we, again, like the approach I was describing, we have a very vertical approach that we know that we have to take one vertical use case to the market to make it as seamless and easy as possible, and not have too many Lego pieces that you throw on a table and say, well, you go build something with it, right? So we build that house and we think the house is the right house to do, and then we learn how the people inhabit it. But we do know that these Lego pieces, each in themselves, are very valuable, and we will open them up for others to use in an individual fashion at some point in time, once we have a high degree of confidence that they're actually doing what they're supposed to be doing.
Okay, interesting. So if you wanted a full Masternode, 50,000 required. I notice you're on HIT BTC, is probably the largest exchange for you at the
I think
moment.
so. Yeah. Yep. That's right.
Bancor Network, which was good to see actually. I haven't seen that many people on Bancor Network, so it's yeah, it's nice to see. I think that was your second kind of highest. But the Masternodes hopefully will go live maybe September, beginning of September, or at some point during September. And the fractional ownership, when is that token due to go live? Is that going to be a little bit later, or is that going to be sort of at the same time?
No, the fractional ownership is going to go right live when the masternodes go live. So that's again, our goal is to have in sync that we don't have these minimum requirements that people have to go through. That said, if you want to participate in the masternode concept, there's other requirements because you obviously have to do KYC, and it's a more of a passive activity. If you run a masternode, it's very active, which defines it as being something different. But that said, everyone has to sort of hold true to what the requirements are. But that's the goal, that we have both going alongside together. The market development fund rewards, they will probably be finalized until the end of the year.
Now, I noticed that. So about 25% in the first year and then decreasing by, is it 25% a year as it goes on?
Yes, exactly. So it's the entire year broken down into individual blocks is going to be 2.5 million. And then that 2.5 million swarm tokens actually reduces by another 25% in the following year and so on. So it's a model on the 10 million tokens that has been calculated for 100 years. And then sort of that leads to individual block rewards that, are being transferred into the wallets that stake these masternodes.
Yep. Fantastic. And tech-wise, what kind of requirements will be required for the masternode? Is it going to be sort of fairly low spec, or is it going to be sort of high spec where there'll be a lot of kind of computation and stuff like that on it?
It's a fairly standardized requirement. Sam, correct me if I'm wrong, but I think it's a regular, low to medium kind of instance on your most favorite cloud services. Yeah. So we're trying to make the installation as seamless as possible, where people can just, use images for, Amazon Cloud Services or for Google Cloud Services or Azure, or run their own on their own hardware. But yeah, that basically, can also change over time. So what we're setting to do is actually, we're going to run this as an envelope technology for the first phase to prove out that the stability is there, that the masternodes do from the update process, et cetera, they do what they're supposed to be doing. Yep. And then the sort of the transactional layer of the Swarm blockchain is going to insert into that very shortly after. And then there's other data services that might reside on top of it that are required for all these constituents to communicate with one another, which obviously as a neutral, nonprofit driven market infrastructure is highly advantageous for the market players to do. Because in the end, it's not about us replacing middleman with another middleman, but it's us about opening up a market infrastructure where we don't have any position in it. So Swarm is just a nonprofit that develops all this technology and offers it up for people to use. But it's not for us to actually build a business model in the middle of it all.
Fantastic. So it'll be relatively straightforward at the beginning, but then undoubtedly there'll be more functionality as the platform develops and you find out more stuff that needs to be kind of pushed on those masternodes. So as time goes on, you might need more kind of processing power, more responsibility for these.
That's correct, but the rewards start the very first day. So there's no difference in terms of what the rewards would be depending on the functionality that we run on them. So the incentive level is very high at the beginning and doesn't decrease until a couple years in. When the market development fund then becomes really interesting.
Yeah, fantastic. And as you said, with the market development fund, it's still ongoing, so there's some regulatory sort of issues to kind of iron out, but that should be done hopefully Q4 this year.
That's right. We have a high degree of confidence that the construct that we're looking at right now is doable, but still, you don't have the clarity until you actually have it in place. So there's a couple of restrictions on the structure that we have to go through, but also the question is like, what do masternode operators, what do they have to go through to participate in those part of the rewards? But the good news is we are a regulatory compliant network, so it should be relatively straightforward. If there's certain restrictions that operators can go through those restrictions if need be. And by the way, one thing is actually also worthwhile mentioning is that so this whole network of global masternodes that we're building, there is actually, and this is a high degree of confidence that we're giving to regulatory considerations by institutional investors. We can actually sort of help them reach masternodes in their respective regions to do certain amount of processing that is needed to be in the territory that they're operating in. And so from a compatibility with the way that compliance in financial institution works today, it's a great infrastructure to operate some of these data services that, you know, today would have a hard time to exist because nobody would know where they would be processed.
Yeah, fantastic. Yeah, so if you have a country that requires stuff to be done within its own territories or whatever, you'll be able to do that, pull out the relevant kind of masternodes and then push all that kind of transactional up to them. That's really interesting. That's not something that I don't think anybody else is doing at the moment, as far as I'm aware.
We're kind of surprised that, especially when it comes to financial transactions and all the market infrastructure that people are building, that people overlook these kind of things sometimes. But we're coming at it from a lot of experience in that field, and so we think that we're architecting it in the right way. We're getting a lot of confirmation from the partners that we're talking to that it's done the right way. Doesn't mean that that's going to be the standard. So for certain transactional services, it's not required, but for certain others, it is. And if you really want to sort of present this full stack of security token platform to the market, it's essential to have these kind of capabilities and at least design it in from the get-go, because it's really hard to fix later if you don't.
Absolutely. And I mean, do you have a sort of baseline number of masternodes that you're hoping to have running by, you know, end of the year, say?
We built these metrics to actually have a balance between efficiency and distribution and decentralization. So we felt like if you operate nodes under 100 nodes, the degree of decentralization is not there.
Yeah.
But if you operate beyond 1,000 nodes, it becomes, from an processing efficiency and response efficiency and the cost side, it becomes really difficult. So the target set that we have built these metrics on is to be in that middle between 100 and 1,000 nodes, and then sort of, you know, see how that serves the network well.
I mean, the other thing is, I mean, I see this with various Masternode coins, you know, the more you have, you know, some have 10,000, you know, smart nodes or something like that. But the trouble is that every time there's a software update, then, you know, 25% of them don't update for 6 months. You know, some of them never get updated. You know, some of them go kind of quickly. So you're always kind of like, you know, adding and kind of losing kind of Masternodes. You see this within, you know, just the payment kind of rewards for a lot of these kind of things. It's like every time there's a rollout of new software, you know, some people just don't do it. Some people are away. Some people aren't aware of it. So, yeah.
Which by the way, led us to rethink the way that the rewards are structured. So the Market Development Fund came into play by really trying to think how to not make the incentives go down, which, you know, can have a deteriorating effect of an interesting network over time, because the rewards might not be as interesting for people to operate the infrastructure. But quite to the contrary, they become more interesting over time, right? If you really put the compound interest to work here, the rewards system will grow over time. So it becomes even more interesting for people to operate nodes, participate in that benefit, that value stream that's coming back, and then as a result of that, you know, the network be more resilient.
So you're hoping for sort of like, I suppose, slightly more kind of active masternode holders rather than somebody just slinging up a node and then just, you know, collecting the tokens. You're hoping for people that will, you know, vote for, you know, kind of changes, will be, you know, involved in the kind of community, involved in kind of like the future kind of planning and structure of it.
We're hoping for it, but also we provided for the possibility that not everyone's a financial expert. So if you're a technology expert and you're a blockchain geek and you know exactly how to run these nodes and the infrastructure, you can delegate your vote to someone else that can actually take that decision for you. If you are participating in that decision indirectly, you're still participating in the decision. So I can foresee a situation where there's maybe even a professional investment manager that, you know, that offers a service to Masternodes saying, I'm willing to manage the money that is in this fund for you guys, and here's my track record, and here's the reason why you should believe me more than others. And it might actually be that a lot of votes actually sort of sign over the voting ability on their respective portions of it to that fund manager. So the trailblazing that Dash has been doing in some of these concepts is amazing, and we really love how they've actually put it together and the steps that they're taking with some of the efforts. But at the same time, the governance that they have is is kind of rigid. It requires a lot from the masternode to stay up to date, make decisions. And in a liquid democracy sense, that actually can be leaner on the individual, where I could say, well, I don't know much about investing in renewables, so I'm going to give that to Sam. But I do know a lot about real estate, and therefore actually Sam should give it to me. So that differentiated delegation as well, not just the absolute vote, but the vote on a topic can be delegated from Sam to me and vice versa.
Yeah, and I quite like that. So there's a real granularity within kind of voting. So it's not just, here's my vote, you have everything. It's like, I want to vote on real estate. As you say, you can vote on finance. I'm interested in, this, you're interested in that, or you're more skilled in that. So you can kind of move that around.
And in a way, we're trialing we believe that kind of governance should be done on any kind of asset structure. So we're basically kickstarting and trialing in our own way what our view and vision is for every security out there.
And in terms of the investment opportunities on the platform at the moment, say taking a bit of a jump back, how many currently live sort of opportunities do you have? How many different tokens, SRC20 tokens?
So we took a very controlled approach, which is we curated the first funds ourselves. So there's 7 funds on the platform. We have roughly 80 in the pipeline that want to list, which is obviously a huge stack of effort if we would actually do due diligence ourselves on every single one of them. But it's completely overwhelming how much interest there is to operate on this kind of infrastructure and open the door to both crypto and fiat investors in a different fashion. So that was breathtaking to see that unfold, and it's actually growing by the day. We're working very hard right now on a way to open that up more and actually sort of have a differentiated way for people to use this infrastructure without going through the bottleneck of our organization doing the due diligence.
So at the moment, you're doing all the due diligence in-house for every opportunity on the platform?
We have been doing it. We basically, that was the first step that we also communicated in the white paper. So it was the first 6 months we committed to the fact that we're just going to bring opportunities that are solid, that basically have been sort of selected, matching up with the interest of the investor pool that we know, and just eating our own dog food, just proving out that this actually has a way to exist, and it functions the way it does. And so that's been going quite well. And now we're going to open up more, and there's going to be more topics that are going to be covered, but we're going to probably do it in a different way. So
what are the next steps for somebody? If somebody's interested in the kind of Masternodes, if somebody's just interested in the platform, how can they get kind of involved?
So 2 things. One is actually, so if you're interested in Masternodes, go to swarm.masternodes.com. There's a whole set of information there. Sign up. We will actually notify people when actually the Masternodes are released. In that context, it might be a good idea to start accumulating 50,000 Swarm and to sort of build that staking that is necessary to participate in the rewards. The second thing is actually, if you're interested to invest in the opportunities in a more direct fashion, you go to invest.swarm.fund, and you can log in, you can qualify, you can look at the investment opportunities, and stay up to date on how many other opportunities will be listed there. If you're interested to launch a security token and to tap into an interesting capital pool, go to tokenize.swarm.fund, and you'll find all the information there, how that process works today, and how we actually sort of help people take them by the hand in helping to launch these tokens. And there's a lot of information that we're asking there, but for good reason.
Is there anything that you think we have covered that you'd like to kind of expand on or talk about more about?
No, I think we covered a lot. Thank you very much for your time and having me on the show. And I look forward actually to chatting as a follow-up sometime soon.
Absolutely. It's been a real pleasure. Been really interesting as well. I think it's nice to kind of talk in a little bit more detail, actually with people involved in these kind of projects about what they're kind of doing, see the kind of passion behind it. So it's been really good. Thanks very much for your time.
We hope you become a Masternode operator yourself.
Well, fingers crossed. Yeah, I think I might do. I'll have a little bit more look. It might be time to start accumulating.
Okay, excellent. Good to speak.